if the Fed were just to say, okay, let the stock market do what it's supposed to do, the stock market starts falling, immediately you'll have a pension crisis that will make what happened in 2008 look really tame.
Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and back with us today is Dave Kranzler from Investment Research Dynamics. Dave, thank you so much for joining us today.
Thanks for having me on again, Elijah. It's always good to be on your show.
All right. Well, earlier this week, we saw gold break through 1,300 to a new high for 2017. What do you think this means for the future of the gold market?
Well, we had a couple geopolitical happenings, I guess, or events, and it kind of pushed. Gold's been banging its head on 1,300 for quite a while now, and the just sort of the sheer force of momentum from the North Korea incident and some of the things going on with the current presidential administration and just Capitol Hill in general, I think kind of got the momentum going toward and through 1,300. I want to see, it's through 1,300 for now. I'd like to see it hang on to 1,300 and then move higher from there. So to me, it's not a definitive breakthrough of 1,300, but it's certainly, a good move in the right direction.
Now, you recently wrote in an article about how what the GDX is doing right now. It's a collection of a lot of the large cap gold mining stocks. You say that the GDX is acting very bullish right now, and can you discuss this?
Sure. Actually what I had written, and I had published this commentary in my mining stock journal last week for my subscribers, and I just I excerpted it because and put it into a blog post because I thought it was, I just liked it. And I don't know that, it's like TF Metals, Craig Hemke does a lot of analysis like this, but you don't really see a lot of it out there. But historically, sometimes stocks will make a move before the underlying fundamentals become apparent. And so, a lot of people, especially if the markets are operating efficiently, which they're clearly not and haven't been for quite some time, but the stocks can kind of be a forward indicator of fundamentals that then become more apparent, and smart money's already gotten into the stocks ahead of sort of the general investing public seeing these fundamentals and saying, oh, I need to buy these stocks. So in the GDX, you could also make the same analysis for the HUE index, which is, I think it's 15 stocks that used to be, all the stocks were unhedged in there, but some of the stocks in there use hedging. But that also kind of broke out, and they both have broken above both their 50-day moving average and their 200-day moving average. And I wanted to use the GDX just because it's a bigger universe of producing mining stocks than the HUE index, or as Turd Ferguson calls it, the HUE. And so if you just kind of graphically look at it, and again, I prefaced it with, I don't put a lot of stock in drawing geometric lines on graphs and saying, oh, well, this is what this means. But certainly moving averages are significant. And you also, I just happened to notice today, the 50-day moving average is starting to move above the 200-day moving average. And those can be significant because a lot of the hedge fund algo programs are programmed based off of, variations of moving averages, and the 50 and the 200 are kind of the most commonly used. So it certainly would indicate that there's more buyers of these mining shares than there are sellers. So what I had noticed is, both the Huey and the GDX had kind of formed what's known as a wedge formation that chartists like to look at, and it kind of broke out of that wedge formation. It also broke above the two moving averages, and it just kind of looks like it, sort of a general breakout. Now, right now, it closed today at 24.16, and I guess from a technical standpoint, just looking at the chart, I'd like to see it get above 26. And then I think if it gets above 26, gold will have been moved well above 1,300 at that point. So I just thought, again, there aren't any indicators that are perfect indicators of what's going to happen going forward. But this is one of those indicators that, is probably better than 50-50 track record, just stocks in general of where the market's going to go next. So that's what I was trying to bring attention to my subscribers. And then, I put it on my blog earlier this week. One other thing I'd like to mention about the GDX, and I thought this was interesting, the short interest in the GDX is really high right now. 38% of the float is short at this point. That's just a staggering short interest. And it essentially means that we could also see a short squeeze move in the GDX. And it kind of boggles my mind that there would be investment entities out there that would take such a large short position collectively in GDX. It doesn't make any sense. So that's another real bullish indicator for the GDX, and obviously for the Huey, and it'll flow down to the junior mining stocks as well.
So what does this all then mean for the gold market itself?
Well, I think we've been kind of, in my opinion, and I'm not alone in this, but, everything kind of bottomed out after the 5-year downtrend that we had in December of 2015. And we had just a massive rally in the sector during 2016 or for 3/4 of 2016. And then gold and silver started, and the miners started selling off last August. And it looks like that the market being better sellers than buyers, it looks like that condition is over. And again, for me, it's a little bit too early to predict anything. I think maybe in the middle of September, if we're still on track like we are now, I think we can probably say, the next leg of this segment of the overall bull cycle in the precious metals market is underway.
All right. Now I'd like to move our focus to the stock market. Your most recent article explained that the stock market right now isn't actually a market at all because it is so manipulated. Can you expand on this?
Yes. And I don't think there'd be too much opposition to this viewpoint, but there's clearly a quote unquote invisible hand operating in the stock markets all over the world, not just here. It's all over the world. I mean, it turns out the Chinese government has been buying hundreds of billions of dollars worth of Chinese stock to keep their stock market propped up. We know the Japanese central bank's been buying hundreds of billions worth of Japanese stock. And the only central bank that's not really admitting that they're doing this is the Federal Reserve and some of the other Western central banks. But the stock market has, because of all of the money printing and direct intervention by the central banks and governments in these markets, the stock market no longer functions as a a risk and an efficient capital allocation mechanism, nor does it uh, any longer have the characteristic of price discovery, meaning that the price of these companies and their assets can be determined in a freely traded market. So when you see the type of thing that we had earlier this week, where all of a sudden the missile, North Korea fires an ICBM over a G7 country, and as soon as that happened, the futures, the S&P futures were down as much as 25 points. I didn't look at the Dow futures, but it implies that the Dow futures were down over 200 points. And you wake up the next day and the stock market opens and all of a sudden everything goes green. So you had not only a 25-point recovery from being in the red on the S&P futures, all of a sudden they go green. I mean, something came in and prevented the stock market from going lower. And I think the reason why it's being done, there's a lot of reasons, but one of the primary reasons is if the Fed were just to say, okay, let the stock market do what it's supposed to do, stock market starts falling, you're going to have you'll have a pension crisis that will make what happened in 2008 look really tame. So they've gotten themselves, with all the intervention that they've done in the markets over the last, call it 20, 30 years, they've painted themselves into a corner where they have no choice but to intervene in the stock market and prevent it from going lower. Because if they did that, the alternative is a total systemic collapse, and it wouldn't just be in this country; it'd be global. And I personally think it's going to happen eventually anyway. But in the meantime, there's a whole micro universe of stocks that are at 52-week lows and hitting new 52-week lows almost every day. So you can still make money shorting this market, even though they're doing what they can to keep the broad indices propped up.
No, you were saying that eventually it will collapse. And it seems like, if the market is so manipulated and it's just being propped up with manipulation, no manipulation can last forever. So it has to collapse. What is your view on what would happen with people's pensions, 401ks, and IRAs, or any of the money that's in the system?
The pension funds right now are technically, most of them, if not all of them, call it 99% of them, they're all technically bankrupt as it is because they're so just drastically underfunded. And that in and of itself is these pension funds operate like a Ponzi scheme, and Ponzi schemes never last. So, I think originally the intervention started off with good intentions, to try and limit the harm that comes when markets correct. But it's the more they intervene and the more they have to intervene, the worse they make the situation. And I don't even like to think about what could happen when they eventually lose control of this. Unfortunately, history tells us that these types of situations typically end up in a war.
Now, moving our focus to the government budget, which is they have to basically figure out a budget. Congress has to figure out a budget by the end of September. Now, what is your perspective on this? Do you think Congress will agree on a budget?
That's a great question. I don't think anyone can claim to have a good read on how that whole thing's going to resolve. I mean, I know in the past when the debt ceiling limit has needed to be raised in order to avoid a government shutdown, and also, when it's needed to be raised in conjunction with the next year's fiscal budget, there's been a lot more coverage in the media on that issue. I mean, on one hand, I think there's just so much discord amongst both parties within each party and, between the two parties. I find it hard to believe that they're going to be able to sit down and and resolve this thing without some major bumps in the road. But on the other hand, I think Congress has been kind of on recess this whole month, and so I don't really know that we'll be able to get a good read in terms of the political grandstanding that's going to start happening until they get back and we're in full session after Labor Day. It's certainly something that at least according to the Treasury Department, the government's out of cash by the end of October. So I would think that the situation needs to be resolved then. And perhaps the tragedy down in Houston, which is going to require certainly massive federal government assistance with money they don't have, that might be the impetus to get these guys to raise the debt ceiling. Again, I think, raising the debt ceiling is just going to make all the problems that we have in our system even worse. But it's either that or shut down the government. I don't know why anyone would lend this country money. I don't like paying taxes, and I certainly wouldn't lend this country money. So, by buying treasury bonds. So I think we could also, on the back of this, see more quantitative easing or some sort of monetary injection from the Fed into the system. Oh, and just real quickly, that could be one of the sort of hidden underlying factors that's driving the price of gold here, is the fact that it's going to, whatever solution they come to in D.C. to fund the government and also to provide assistance to Houston, it's going to require another large round of currency devaluation, which means money printing.
Right. And it seems like in those times of, higher inflation, people try to look for a safe haven. And recently there was an article on Bloomberg about saying that really gold is kind of losing its safe haven status. It's not much of a safe haven anymore. But you read that article and you think that's crazy that right now gold is still very much a safe haven. Can you expand on that?
Yeah, I just, and it was posted on Zero Hedge, and it's a opinion that was written for Bloomberg by Mohammed El-Arian, and the title is "Why Gold is Less of a Haven These Days," and then his thesis is its status has been eroded by unconventional monetary policy and cryptocurrencies. And I look at that and I'm like, what are you talking about here? Certainly in the Western Hemisphere, there's been less interest by investors in the Western Hemisphere in buying gold and silver. There's no question about that. But what about what's going on in the Eastern Hemisphere, where you've got record levels of physical gold accumulation, primarily China, Russia, and India, but also several other countries there. In fact, Turkey's on track to have a record year of gold imports. So, I don't think these guys are buying gold because they think it looks pretty on their wives or for gifts. They're, the whole Eastern Hemisphere, which is significantly larger population-wise than the Western Hemisphere, is accumulating gold as a safe haven. So I'm kind of surprised because I don't know what type of attention he was trying to generate from this opinion piece, because it certainly did not seem to be very well researched. It didn't have facts in it, and I just didn't think it was well thought out. So
in your view, what makes gold still a safe haven in the Western world?
Well, I think it's a safe haven in general. I just think forget Eastern Hemisphere, Western Hemisphere demarcation, all the qualities that your audience knows and loves about precious metals is what makes precious metals a safe haven, especially gold and silver too. It's essentially a hedge against irresponsible central banks and governments. And that's what, at least in my 54 and a half year lifetime, that's what we've had: irresponsible banks and central banks and governments. So, at the very least, there's certainly been just an incredible amount of currency devaluation going on, fiat currency devaluation going on around the world, not just the Western Hemisphere. I know since Nixon closed the gold window in 1971, gold has lost the dollar has lost something like 90% of its value against gold. So that's what you're buying gold as a safe haven from the ongoing devaluation of fiat currencies.
All right. Well, Dave Kranzler, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Sure. I think, again, with investing in the precious metals sector, you got to take a long-term view. And unfortunately, a lot of people didn't jump into this sector until 2010, 2011, when it went through a cyclical peak in price. And whether or not you understand how manipulated the market is, all bull markets go through cycles. And this bull market had a cyclical peak in 2011, and I think we're eventually going to be headed above the prices that we saw back then. So, higher than $50 in silver and higher than 1900 in gold. But it's not going to happen overnight. And it's just one of these things where I think you just got to accumulate a little bit at a time, every month if you can. Whenever you have spare cash on hand, just go buy some silver eagles, or buy some, if you don't have enough cash for a 1 ounce gold coin, go buy some fractionals, because at this point, it's really, to me, it's the only real time tested. When I say time tested, going back 5,000 years instead of 3 to 5 years, like the cryptocurrencies. It's the only time tested refuge from fiat currencies. My website's investmentresearchdynamics.com, and you can also find out information about my mining stock journal and short sellers journal on that website.
All right, great. Thank you so much for your time, Dave.
Thank you, Elijah.